traders, Cousin Vinny coming to you from theclosingprint.com, October 3rd, 2021. In this edition of your weekend video newsletter, we'll discuss the indices and the markets in general, which have been fading over the last 3 to 4 weeks, giving us good reason to be cautious. With the big cap tech stocks that we follow all moving lower, with the exception of Tesla, with a modest gain last week. Bonds are off but bouncing. We got the US dollar with strength, but that faded as well. We have gold and silver showing signs of a bounce, so we do have some indications there could be a safety trade in play. And the heat maps for both the S&P 500, small caps mixed for the most part, with international markets mixed as well. That said, we do have a lot more stocks set up this week, mostly in the financials and energy sectors. Industrials look a little better, while the reopening trade has lots of stocks from the hotels, the airlines, and cruise lines showing some signs of a bounce, in addition to some strength in casinos and gaming stocks. Altogether, we have 10 bullish indicators this week, 5 neutral and 5 bearish. We're still a bit cautious with the S&P 500. The 4,300 level is key support. There's an air pocket below if we drop below that level, as there is weaker structure below 4,300. Resistance at 4,375. We tagged that on Friday. Zero gamma is at 44.15. We do have 44.50 and 4,500 as resistance. The vol trigger is at 43.75, and we're bearish below. Negative gamma greatly reduced last week, so we could have a little bit of a tailwind going into this next week of trading. All things considered, however, we will start the week with a bit of caution. Starting off the week with the NASDAQ 100, we're below the 921 and 50 day. We know that whenever that is the occasion, that we're in a markdown phase. And until we see a base and price action push off of this level, or a lower support level suggested by the 200-day and this volume by price band in this zone between 14,000 and 14,200, we can't assume that the markets are ready to bounce and just follow through. We can also see that with the growth stocks versus value moving lower over the last 5 weeks. Growth has underperformed, yet both growth and cyclicals in the lower panel are below their 21 period moving average, the blue line. So until that changes and we get back above the 21-day moving average, we assume that the markdown can continue lower. Therefore, we're a bit more cautious again this week. We can also see that in the 15 stocks that make up more than 50% of the weight of the NASDAQ 100. So you have 100 stocks in the NASDAQ 100. All of these are below their 9, 21, and 50-day moving averages. The red is the 50-day. Until these shift and get back above the 50-day, we're in a markdown phase in the NASDAQ 100. So if we remove the weight of those top 10, top 15 stocks, we get an equal weight index, and we can clearly see a nice bounce at what should be a support zone, with the number of stocks trading above their 50-day moving average at 32%. That means 68% are below their 50-day moving average. We can clearly see that this indicator is starting to move higher, which is telling us that it's most likely institutions buying up stocks on the dip. We have CCI about to trigger. When both of these move higher, we're said to have a bullish signal. So we'll look for a follow-through Monday and Tuesday despite the weakness in the NASDAQ 100. In addition, small cap sectors are fairly strong as well. We can see consumer staples, small caps are moving higher. They're above the 921 and 50 day. They broke a downtrend. Consumer discretionary tried to bounce last week on Friday in the lower part of its range. Small cap energy above its 9, 21, and 50-day. All of those have turned up and are moving higher, together with small cap financials, with a little weakness in small cap healthcare, looking to get back above the 9, 21, and 50-day. Small cap industrials flat. Small cap materials trying to push a bit higher and bullish, while small cap IT or technology is trying to push higher. Needs to get back above the 50-day and move above this volume by price band area. And small cap utilities, which is below the 50-day. So we have 5 of 9 sectors below their 50-day moving average, but showing signs of buying on Friday. And we got 4 of 9 that are above the 9, 21, and 50-day and bullish. So small caps are pretty much neutral inside of this range that we've seen since the beginning of the year. We're above the 50-day. The 50-day is flat. We have this volume by price band area that's support and resistance, currently trying to push through that area and back to the top of the range. From a weekly perspective, this chart clearly shows the bounce from March of 2020. The markets rallied in small caps more than 149, 150% from this low up to this high, and then we went sideways. So unless we break above 233, we're range bound, and your money is just sitting there chopping around with the perspective of going up or going down, given unforeseen catalysts, which we can't really predict. We also have the Dow Composite sitting right on top of the 200-day moving average in a descending pattern below the 921-day. We need that to move higher and for RSI to get back above 50 to assume a continuation of the bullish trend that we started back in March of 2020. Now they have a very large volume by price band overhead, noted by these 2 dashed horizontal lines. We need to get above 11,600 to resume the upward trend in the markets into year end. Otherwise, if we lose the 200-day, that would be very bearish, obviously. If we include more stocks in the list, the New York Stock Exchange trades over 2,700 stocks. We want the moving average to turn higher. It's currently in a bearish trend, lower highs and lower lows, with a brief move below the zero line on Wednesday and Thursday last week. So with the New York Stock Exchange advanced decline and the middle panel moving sideways, we could go either way. So another reason to be a bit more cautious, with price action bouncing around inside of this sideways pattern that started in around April after getting rejected at the 16,800 level over the last few weeks. We can look at the Wilshire 5000 as well, an even broader measure of market participation, in this case the weekly time frame. From the March low up to the recent high in August, we've gained over 110%. RSI still remains above 50, but it is downward sloping over the last 4 weeks as volume picked up last week and the Copox cycle continues lower. Given the nature of this cycle, it is a lagging indicator, so we need to see this turn up over the next few weeks, perhaps after a little bit more pullback, which could come in right near 382, between 382 and 50% retracement from this breakout zone that we saw last year in the fall. If we come back to that level, that would be considered a support zone if weakness persists. We could always move higher, of course, from this point. This is about 236 in between these two, and we can see that buyers have been stepping up at the lows of the week over the last couple of weeks, together with what we saw on the S&P Equal Weight Index, where the number of stocks trading above their 50-day had reached a low of 32%, with 68% of stocks below their 50-day moving average. So institutions could be picking up stocks here. Remember, 4,300 is a key support level on the S&P 500, with a little bit of a gap below 4,300 and the next level of support at 4,250. That would be about a 6% pullback, 6.5% on the S&P. We also know that JP Morgan's collar rolled out with the next expiration, quarterlies, December 31st, their bearish put spread was at 41.50. That was noted by Brent over at Spot Gamma. So there's a lot of things going on that we need to see develop this week. I wouldn't just jump in and start buying on Monday unless the markets start rocking. All things considered, the big game changer this week, as we heard on Friday, was Merck's antiviral pill, something you can take at home. Could be a big game changer in the markets. So we've already started to see a lot of buying in the reopening trade. So keep an eye on these things on Monday morning. We will as well. And we'll let you know what our thoughts are after the opening range on Monday. The bond stock ratio between the S&P 500 and the 10-year bond is starting to show signs of a retracement. So if the 10-year yield starts to move lower, look for bonds to start picking up some interested buyers, as the 20-year did bounce on Friday as well from an oversold condition right at the 200 period moving average, while junk bonds, IWM and USO, moved sideways to slightly higher. We did see IBB, one of our risk on, risk off indicators, drop off. That's a risky asset. Biotech's being slammed after Merck's antiviral pill was announced on Friday. So the S&P 500 versus the 30-year bond for the longer term trend looks to be topping out. So we'll keep an eye on that. The rate of change is also starting to change direction. Yet another reason to be a little bit more cautious this week. With the 10-year yield backing off a little bit last week, we did see this weekly time frame still rising. The momentum indicators are turning more bullish, so we're looking for higher highs and higher lows, which would be good for the banks with margins increasing as the 10-year pushes higher. The US dollar also faded a little bit on Friday, but it remains in an upward sloping channel with MACD bullish and above its signal line. Despite the strength in the US dollar, copper is managing to stay in a range, looking for a push back to the top of the range. While gold and silver remain in a descending channel, they are trying to push higher as of Thursday last week, with silver just below the 21-day at this point, still in a markdown phase below the 21 and 50-day moving averages. That leaves crude oil. We can see continues to push higher in this ascending range, and with a positive correlation to equity markets, if this pushes higher, that is seen as bullish for the markets up to a point. Yet another reason to be cautious going into this week with all the mixed signals in the currency market, commodities, and bonds. Most of the stocks listed from the IBD 50, stocks from the relative strength at new highs, sector leaders, the swing trader alerts, blue dot scan, the stochastic scan, and the volume scan all have similar things in common. We have stochastics oversold or at 50 and starting to turn higher. And we have stocks that are either moving above or already above the 921 and 50-day moving averages, with the latter rising and bullish. So we can see that condition setting up in Digital Turbine, APPS, ATKR, AVTR, Builders First Source. We see Car Gurus, CARG, with some nice follow through. We got Datadog, we got Caesars on the list that's showing up at highs. Celsius, Sports Drinks, CELH also looks good. Calon Petroleum, Datadog, Dexcom. We've got Diamondback Energy, FANG, also looking good and following through, breaking out of a flag. Note stochastics in this case is a bit overbought, but the strength is noticeable in energy stocks. They may be a little bit overbought at this point, so again, caution going into this week. Google, of course, Alphabet, that one looks strong. With the stochastics turning, the stock is below the 50 days, so we need to see that get back above the 50-day. Innovative Industrial Properties, IIPR, if you're interested in trading the cannabis stocks, as JJ talked about in the room, at 50-day moving average, looking for a push higher. This company buys and leases back climate-controlled warehouses for the medical cannabis industry group. So this is the way to play cannabis, in my opinion. On the pullback, just looking for stochastics to turn higher. Lovesac Company, this one sells furniture, sofas, bedding, playing the trend in the building and real estate groups. Looking for stochastics to turn. Volume is starting to pick up as of Friday. We're at the moving averages, looking for a bounce. Series of higher highs and higher lows. Like many of the stocks this week, we're looking for price action to be above the 921 and 50-day or just transitioning above as it starts this new trend of phase 2, the markup, having already based phase 1. Phase 2 is the markup that usually lasts the longest. C Limited hanging out at the 50-day moving average, looking for a bounce, relative strength. We've got stochastics turning. We've got volume on Thursday and Friday. RSI's rising. We also mentioned Star Bulk and a lot of the maritime shipping companies were bullish, looking for the follow-through. Stochastics turning upward, volume increasing. You can see institutions have been involved in buying shares. MACD's crossed and RSI's rising, suggesting there's more upside, potentially a breakout to 52-week highs. Atlassian, symbol TEAM, at the 21-day moving average. Notice the wicks underneath these candles, looking for a follow-through. RSI's rising, volume increased. On Friday, stochastics is turning. ATR is rising. Tandem Diabetes got a hammer right on the 21-day moving average. RSI is starting to turn higher. We do have a little bit of resistance overhead at this volume by price band, but stochastics is turning, looking for MACD to turn this week as well. Obviously, banks playing off of the rising 10-year yield. Western Alliance, Bancorp breaking out to highs. I'd be interested in a flag. I thought about that for the last week. I thought flag might be in play, but it just took off on Monday. Continues to ramp higher. As you can see with Western Alliance Bank, the earnings increases are substantial. Looking for this flat base breakout this week. Volume showing institutions have been picking up shares. It has earnings at the end of October. Stocks from the relative strength scan over at IBD at new highs. Stocks like CB Richard Ellis in the office leasing business with great earnings and sales. The company reports at the end of October. Looking for a breakout of this base. We're currently 11% from this breakout zone. Flat base on base pattern. Looking for a push higher with a target somewhere around 110, 120 in the short term. The company provides property investment management, loan servicing, origination with 498 offices worldwide. CF Industries, just want to point it out. I'm not interested in chasing it up here, but stocks in the group breaking out last week out of a flag on volume, showing institutions are active, and MACD is showing that bulls are in control. With the top relative strength in the group of fertilizer manufacturers in the U.S., noted down here in the left panel. Chart Industries, another stock showing up in the relative strength at new highs scan. Stochastics turning at 50. ATR is rising. Look for a breakout this week with a nice follow-through as RSI suggests more upside. ConocoPhillips from the energy group continues to push higher. Look at the volume in the previous couple of weeks, showing institutions were buying. Continental Resources looking for the breakout this week. Continental Resources engaged in exploration and production of oil and gas in the north, south, and eastern regions of the U.S., looking for a follow-through with earnings in the first week of November. Note the stellar sales and earnings with an A plus in its group relative strength. Another name in the group, Devon Energy, also following through out of a flag breakout last week. Volume the past couple of weeks have shown institutions have been picking up shares. A lot of stocks from the gaming group, IGT, breaking out of a 52-week range with volume preceding price. Financial services stocks also look good. Jefferies and Stifel, along with many more in the energy space. Murphy Oil, Northern Oil and Gas, Nutrien NTR breaking out as well. Another fertilizer manufacturer with earnings the first week of November and a huge jump in sales and earnings. Range Resources from previous watch lists and commentary during the live sessions continues this path higher. Volume picking up, showing institutions are active. Robert Half providing staffing services. Looking for the economy to improve. We should see a breakout in Robert Half. Volume should pick up this week. MACD's about to turn, and we got stochastics pointing to higher. ATR is rising, showing us that we should see larger ranges continue in the short term. SM Energy, another energy stock breaking out last week. Banks reporting on the 12th, 13th, 14th. The big mega banks start to report, looking for SBNY to continue higher out of this flag. Stocks from the stochastic and volume scans also looking good, like Blackline, with stochastics oversold, looking for a turn higher, volume to pick up. Even Ethereum Grayscale is starting to bounce, turning. Stochastics rising, MACD about to cross, volume picked up on Thursday, Friday, looking for RSI to continue higher. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, October the 3rd, 2021, with your weekend video newsletter. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock p.m. on the West Coast, so make sure to check your inbox for that. Have a great evening. What's left of it, we'll talk to you tomorrow. Take care.